Good afternoon. This is Tom Aspray with the Viper Report. It's Friday, October 23rd, and we're heading into the close here. About 10 minutes left of trading. In last weekend's article on Forbes.com, I took a look back at the past presidential elections based on my advanced decline line analysis to show you how well it predicted where stocks would move after election. Didn't tell you who was going to win, and I certainly can't tell you that now, but I can tell you where I think the stocks are going to head after the election. And so far they're heading that same direction going into the election. There's some quite interesting charts there. This is the New York Composite, 2004. It was very strong. This was the election time. It had broken out of a downtrend. Even though the Fed was raising rates in here, stocks kept powering higher. In the article, I also pointed out that typically the last couple of weeks going into the election are pretty choppy, and that's been the case this week. We've had a couple of interesting days. This chart shows you that the S&P 500 declined up until lunchtime and has been rebounding ever since. It's almost up 10 points. And the advanced decline numbers here have been positive pretty much all day. They were one-sidedly positive early on, moved back to neutral, and now look like you're going to finish on a fairly positive note. That's a good sign. For the week, the S&P will still be down slightly on the day, as will the NASDAQ 100, but the big winner is the small cap Russell 2000. We took a position at last week. You can see that the hourly chart analysis, which is part of the Viper ETF report, you can see a trading channel. We broke out early in the month, and for the past couple of weeks we've been in another sideways trading range, and we're heading up towards the upper part. It's up 0.8% as we head into the close. I think a breakout above this 164.24 area is likely, and if we get that, then the next target is around 170. Even though the markets have been choppy, we have been taking a few selective positions. One of our ETF picks this week was the XLC. That's a communication services select sector. It's been the best performer this week. You can see with today's action, it's up 0.85%. Looks like it's going to close below this downtrend. So our first target is in the 64 area, with the potential, given the breakout, could take you up towards 68 to 72. You can see the RS. This measures how it's performing vis-a-vis the S&P 500. It started to lead last week, and the OBV also shows a positive trend. We've had a couple of good stock trades this week. We closed out our position in Snap for a 29% profit, and it still went higher after that, but that's okay. 29% in less than 2 weeks, we'll take it any time. We also closed out our position in AVLR. We got into the long side at the start of the month. Looked a little toppy in here. Our stop was hit, so we're out, and we may look to get back in, particularly if we get a decent pullback. In our ETF portfolio, we have a number of long positions. Our long positions in the ARK Genomic Revolution ETF, the ARKG, was closed out for over a 17% profit last week. It had a really nice and quick run. It was a little too much too fast, so we're looking to get back in at lower levels. You can see we're also still in some of the precious metals. They had kind of a choppy week, but the bias is upward, as well as we're in healthcare, technology, and as I mentioned, the XLC. In the past few weeks, I've been emphasizing that you should look at the data, not the news, not the tweets, to guide your investments, and that's certainly been true, as going contrary to what the tweets would suggest you should do, like for example that really rough morning when we found out about President Trump's unfortunate COVID infection. We were buying on that ugly open, and it turned out to be working great. So if you're interested in learning more about the market, I do still have my special training offer, but we also have the Viper ETF report and the Viper Hot Stocks report. Both come out twice a week, and oftentimes more. This week we've had 4 reports in 5 days, so that's not uncommon. And we give you, very solid data-based analysis of the markets and recommendations. And we're looking for a good last part of the year and hope you can join us. Have a great weekend, and thank you very much.